Hey guys, it's Chris Mincola with the Mincola Group over at West USA Realty. We're doing our Phoenix Metro housing market update. I'm going to share my screen with you here real quick and jump right in. All right. So let's talk about the elephant in the room first and all the myths and misinformation that's out there for the clickbait and the news headlines. Okay. And that's exactly what it is. There's a lot of moving parts to this. There's still some things that need to be shaken out. The judge still has to approve the settlement and all that. So we'll see how everything goes. But for right now, what we know is this. CNN headline here: 6% commission on buying or selling a home is gone. It's over. No more real estate and this and that. No more agents will be used and craziness will happen. Yeah, well, none of that's true. So, first of all, in my opinion, okay, I'm not an attorney. I'm not, saying anything here out of line, I don't think. But in my opinion, it was kind of a ridiculous lawsuit for a money grab. And, the DOJ wanted it. So here we are. And I'll just say this, that, we have always had negotiable commission structure. So, that's always the professional fee for selling a home has always been negotiable. Now, what usually happens and where some of the misunderstanding takes place in a lot of this, and in this particular case is, um, number one, the seller agent usually splits or gives a portion out to a buyer's agent that may bring in a buyer when they're marketing the property. So that's kind of almost think of it sort of like a subcontractor, maybe not exactly. I mean, with for the analyticals out there, maybe not exactly, but sort of like you're the one selling the house, hired to sell the house, but yet you may offer portion of that commission or half of that commission or whatever the case is, um, to a buyer's agent that brings somebody in that's representing a buyer. Okay. So that's always been that way. Commissions have always been, in residential real estate, have always been negotiable. Every state is a little different, maybe region, whatever, just as a disclaimer. But what this is saying basically is that commission on the uh, home cannot be listed in the MLS. Okay. So right now it is listed in the MLS, and they don't want that to happen. The DOJ said, we don't want that. So then attorneys came in with this class action lawsuit, and NAR folded on it, and they thought this was the best way to go. I don't know if it was for them or for the real estate agents out there, but there may be some trade organization wars happening and some other trade organizations coming up to represent us. That's kind of an insider thing. But there's a lot of myths out there that this means that the commissions are going away, realtors are going away, and all that could be further from the truth. I'll give you one quick example too that could kind of correlate with this, and I'll get into some of the myths and details. But in commercial real estate, um, the professional fee is typically written into the offer as part of that. So that's very common for that to happen, where at a high level, in commercial real estate, where that professional fee is written in with the offer. And basically, and again, this hasn't all been figured out completely yet, and each MLS and what the DOJ is going to want and what the judge says and all that. But basically, it's just going to be, where we kind of have to write it into the offer. And for buyer's agents, you're going to have to, the part-time buyer's agent, the maybe non-professional buyer's agent may be going away for the most part, because, we like here at the Mincola Group, and for a lot of high-level agents that are out there, we take, a more consultative approach. Sometimes people look at realtors as professional door openers or whatever, but we're actually practicing limited law with contract. With this contract that we're writing up for this home purchase and this offer. So, it is a legal document that we're working with. So, you really got to kind of come in with a more consultative approach. Sure, anybody can go buy a house from anybody, but there are a lot of liabilities on both sides that come into play, and due diligence that has to happen, and things if you don't know about can really catch you off guard. And a lot of times we see this in off market listings maybe, where there is no agent involved. That's why we carry error and omission type of protection through our brokerage. And so that we're covered, the brokerage who's actually a representative is covering you in the agency relationship, and you're not on the hook for it. So there's just a lot. I'm not going to go too far into that, but what we really want to do is debunk some of this stuff here. Okay, and here's just another one. Seller pay. How it works now. Seller pay 5 to 6% commission on the sale price of their home. Typically, the seller agent split the commission. Da 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 da. Well, again, that's all negotiable. I've seen, every commission you could possibly see. I mean, sometimes, agents even have to throw in on both sides or one side or the other, part of their commission to save a deal, because of whatever's going on. So some of that too is nuanced and all that. So it's just a lot of moving parts that, a lot of amateurs or people in the media just don't understand. And that's why, we do what we do. Here's Ryan Serhan, who kind of explains it. And I just want you to get his take. It's pretty quick here. He just did this newscast. And then I'll get into some of the more details of it.
Our next guest is here to weigh in on the recent blockbuster legal settlement by the National Association of Realtors. Joining us right now is real estate broker Ryan Serhan. He is the CEO of Serhan. Ryan, let's just talk about that.
The lawsuit alleged that the National Association of Realtors, real estate brokerages, and local MLSs conspired to obligate a seller to pay a buyer's agent's commission. And what the settlement does is it really acknowledges that the traditional brokerage model has to change. We all agree that there should be a free market conversation around compensation. And so what will happen starting this summer, nothing changes for right now around the country, but what will happen starting this summer is that buyers and buyers agents, if they elect to use one, and sellers agents, should they elect to use one, because you're not obligated to use a real estate agent in the United States, and you're not obligated to pay 6%, 10%, or 1%. Right? Those fees are what the market has commanded for decades.
It's kind of standard, and it's standard because people don't buy homes every day. So by the time you figure out what's happening, you get to the other side of this. Look, I think there are times when I've absolutely needed a broker, other times where I have not.
Sure.
And it's not easy to figure out or to negotiate on these ends. If everybody thinks that this is the way it should be done, why did it take a lawsuit to get us there?
I am all for market transparency. And what frustrates me the most is that the old guard in this business has spent so much time, so much money, on lawsuits just like this, defending where they've been instead of trying to build to where we're going. I think what happens now is new business models. I think there's new opportunity. I think there's going to be greater versatility in how you work with your agents. And what's interesting for me is if you look at over the past 10 years, regardless of this lawsuit, all of the new technology, artificial intelligence, websites, iBuying, Zillow, et cetera, humans buying and selling homes have actually elected to use realtors more because it's so complicated. You don't know where to start.
Well, I have to say part of it is a tight market. If you're in a tight market right now trying to find a house, by the time it's on Zillow, it's gone. So I think that you absolutely need a broker in a tight market where houses are moving quickly. You need a broker if you are moving to an area that you're unfamiliar with. You need a broker if you're a first-time home buyer and you don't know the risks that are associated. You don't know your rights. You don't know what you can and can't ask for along those lines.
And what you'll have now is greater transparency, which I am a massive, massive proponent for. It's one of the reasons I started my own company. I looked around at what my competition was and a place that I could go as a realtor myself, and I couldn't find the transparency that I wanted. And I think real estate agents are paid in a core correlation with their value that they provide to their customer. And that's what you'll see more of going forward. It remains to be seen how this is going to shape out in the open marketplace, right? These new rules aren't going to go into effect until sometime, at least over the summer.
I mean, my only hesitation with any of this is I could have done that before.
Sure.
If I was aggressive enough with the broker and
Of
said,
course.
here's what I'm willing to pay.
Absolutely. There is no obligation to use a real estate agent in the United States. There's no obligation to pay a higher
With
fee.
and without them.
Of course,
Right.
of course. Now, in New York City, everything's a bit different because we're not members of the National Association of Realtors in New York City, and there is no MLS in New York City.
I
So
don't
there are
get
no
the sense that
obligations.
it's better in New York City.
Remember too that great service is expensive. Bad service costs you a fortune. And so we see that time and time again. Discount brokerages have existed for a long time. You could sell your own home by yourself. Somebody just listed their own home in Soho for $35 million. It's a for sale by owner. They could use an agent. Maybe they'll sell, maybe they won't sell. But I think greater transparency is important to bring our industry forward, and I'm for it.
Our next guest is
Okay, guys, so hopefully you could hear that okay. I just thought that was interesting, especially with someone like Ryan Serhan, who's been, TV, real estate mogul, to kind of get his take on things for you guys. But anyway, so just to kind of dig into this a little bit more, I don't, again, some of this has got to be shaken out, like you said, but false. The NAR settlement forced broker to reduce their compensation. Again, totally negotiable. The NAR's settlement will, for the first time, allow sellers to no longer pay compensation for an agent to bring a buyer. That there's never been an obligation, okay, for a seller to pay a buyer's agent compensation. Again, it's been all negotiable. Um, you know, Yet it could, it says here, a past rule requiring an offer of some amount of compensation was a rule of display on a realtor-owned MLS. Yet it could have been as low as $1. Okay. That limitation was removed, and today the MLS accepts all listings regardless of buyer agent consideration. So that's a biggie. Again, it's just not going to be listed on the MLS and totally negotiable. You've always been able to, so again, every state's a little different, but there's always been for sale by owners. There's always been negotiable compensation for seller, or whether there's going to be a buyer's agent or not. And whether or not a buyer will, what this is basically getting at is, in the end, is sellers will still have an advantage by using a realtor and offering a co-broker, or taking the negotiation that comes to them in the offer from the buyer's agent that's represented. Because otherwise, we're going to have all these people that are unrepresented. I mean, do you want to go into a courtroom unrepresented? Do you want to make the biggest purchase or biggest sale or biggest investment of your life for you and your family without any protection at all, no errors and omissions, no real professional to guide you through the process? Those are always the same, the things that we need to think about, and how lawsuits can maybe come back the other way on sellers. One of the biggest things, without getting too far into that, false. The settlement prohibits sellers from paying a commission to buyer's agent and relieves sellers of financial burden. The mandate restricts properties that with an offer of buyer agent commission from displaying an association-owned MLS. Yet practice can't be restricted in any other form of marketing. Seller may still elect to pay a buyer's agent compensation. Okay, so again, these commissions, however you want to slice and dice it for both sides, completely negotiable. Maybe run into some sellers who don't want to pay a commission to a buyer's agent. Again, absolutely. That again has kind of always been a thing, except for that $1 rule, depending on the MLS. But again, do we want to see first-time home buyers doing that? Do we want to see out-of-state buyers coming in? Different state. I mean, because the sellers, if you go straight to the seller's agent, same as if you go straight to a home builder, you're unrepresented. And who are they looking out for? The builder's looking out for the builder. and the seller's agent is looking out for the seller, who's looking out for you? Zero. There's no errors and emissions. Insurance that comes into play. There's no guidance from a professional. They're under no obligation to, help you through the process. You just have to figure it out. And a lot of people think they can just jump online and do that. And I got to tell you, one of the biggest things with selling a property for a client or, helping them purchase a home, it's not just, putting it on this and then selling it and it syndicates and all that. There's other marketing, there's other negotiating uh, strategies that come into play there. There's, the guidance of, things come up during a transaction like this. They just do. I mean, life's not perfect. So, same thing of going into a courtroom or, getting a, surgery done. You want someone who's experienced to take you through that. Do you want to do surgery on yourself? Do you want to go in unrepresented? These are just things to think about going forward for those. So I think, so again, the sellers that participate in that are going to have the advantage over the sellers that don't, for sure. And the buyers, definitely should be represented. Uh, again, everybody's prerogative and choices, but that's just the way it's always been and the way it always will be. The settlement will serve to meaningfully lower prices and make homeownership affordable again. Let me tell you something. The only thing that changes this on affordability of prices, that without getting into interest rates, but prices is supply and demand. Supply and demand, like anything else, end of story, the end. This has nothing to do with that. Zero. I hear this thing, oh, the realtors make the prices go up because you just want to make a lot of money. No, if prices go down, we'll do more transactions. Okay. So it's all about supply and demand. Right now we have low supply. We've had low supply for quite a while. We had lower supply a couple of years back than we do now with higher demand because of the rates and prices being lower. But it's all a function of that supply and demand. Okay. And market shifts usually, they ebb and flow, their cycles. Market shifts usually happen over a matter of 2 months. Once they do happen, that's pretty typical. But anyway, questionable. The NAR settlement is a win for buyers who will now be able to negotiate the fee for representation. Again, uh, it all depends on kind of how this shakes out, whether or not it's going to be, done through, uh, compensation directly to the agent, from the seller or the buyer, or not at all, or through closing cost expenses. We'll just kind of have to see how that all shakes out. Because again, we're waiting on a final ruling from the judge. False. The NAR settlement will result in significant restitution to consumers who were harmed over recent years in their transaction by realtors. Okay, so settlement will result in significant restitution to come. Actually, when you break it down, that isn't the case. But the settlement is huge. Yet when one divides the amount by number of potential qualifying consumers, it works out about $10 per person. Okay, so who made the money here? Whatever the percentage, of the commission of the attorneys were, of the commission of the attorneys was, that's who made the money here. Okay. So you make of that what you will. Those benefiting are the attorneys who have submitted and requested a court for over $80 million in fees. Okay. So, um, this is something that's going to come back and be again, it may ebb and flow a little bit. There may be, start off with different things happening. I think it's going to switch right straight back to, by cutting out the buyer's agent, the sellers are not getting as much traffic. And by the buyers not being represented, we're having more legal issues, more arbitration, more people getting, unrepresented. And, we had that before. And back in the, 80s, they brought in the buyer agent for a reason. Okay. And I don't care what they do in another country. we're not those countries. And people here, the way one of the biggest, best ways they have to create wealth and lifestyle is through home ownership. The end. Okay. I don't care what they do in other countries. Maybe that's why everybody wants to come here. Okay. Let's think of it that way. Anyway, this had an impact. We'll see how it goes. But because Zillow's model, basically, a lot of people don't know this. I don't know, I've talked about it before, but in the past, but Zillow shares declined, Redfin, because their model especially Zillow and a couple other companies had issues with their stocks. But Zillow's model is basically, they want people to go in there and search and then click on an agent. And a lot of agents will, we're on Zillow. All agents are kind of listed through Zillow. We have reviews and all that. You can see some of their past sales, not necessarily all of them. Again, anybody can list a property on Zillow. Typically, their estimates are way off. So there's a lot of things with Zillow that aren't really what you think they are. It's a third party site. It's not a MLS that's has the type of structure that we have, but it syndicates to those sites like Zillow once we push it out on the MLS if we choose to, per the listing agent, per the seller, per the MLS, okay, and so on, and even maybe brokerage. So, and state and region. But this model that Zillow has is basically where agents pay for leads. When you click on something, you say, I want to see this property, and you click on the thing to see it, and you want an agent to show you, it goes out to a bunch of agents. They'll call you. That's why you get a million calls. And we here we don't do that. We have other ways of creating business, but that's where Zillow makes their money. That's their business model. Okay. So anyway, that's why they're having a decline, because it's kind of like, well, what's going to happen? Hang on. Sorry about that. I had to let the dog out. Okay. So just kind of as a segue into the Fed, we're going to talk about the Fed now. Apartment permits are back to recession lows. Will mortgage rates follow? Okay, we're going to get into the mortgage rates now. Okay, so Fed meeting recap. Everything Powell said during Wednesday's market moving news, and that was today. So the Fed chair is looking for two. They're going back to the got to be 2%. It's got to be 2% inflation, even though we have totally different economy that we've had over the last 30 and 40, 50 years. So they're trying to do this demand destruction. That's why they raised the rates. We've talked about that a million times. So he said strong hiring wouldn't push Fed to delay rate cuts, Powell says. So that's good. In other words, even if hiring is rising, continues right, even though we talked about this, the issues with moving the goalposts and seasonal adjustments and all these different data changes that they're making on the way they qualify these things, which is kind of funny. But that isn't going to affect this. So we'll see how true that is. Higher inflation, inflationary data hasn't changed its overall trend downward. So in other words, overall, we can see that, inflation is going to go down. That's important because as inflation goes down, typically interest rates go down. Why haven't they gone down more than, Chris? Well, they were looking at the unemployment numbers big time. Okay. And they also have was it over 8 trillion in runoffs that they had on their sheet that they had to do for the bonds. So yeah, it's a whole thing. But without getting into all that, Powell needs a good reason not to cut rates, says principal asset management Seema Shah. So yeah, in other words, what's baked in here is through they call it the dot plot, what each what all the feds are kind of thinking and they've been saying and all those sorts of things. So basically, in a nutshell, we're going to see 3 rate cuts this year is what they were saying today. That's baked into their plan unless something changes. Okay. So nobody has a crystal ball, but that's where we're at right now. And we'll probably see that somewhere around the middle of the year, right around June. That should be the latest we see that happen. And again, Fed's fund rate drops. We'll see how much. It'll have an effect on the bond market, and then it has an indirect effect on the mortgage rates, which today dropped. Okay. It went up last few days and then down. So that's good news. Now with this, I wouldn't call it a pivot, but not hawkish talk that they've been doing, or as much hawkish talk that they were doing before from the Fed. That has kind of brought the rates down a little bit today. Housing market update: listings surge, luring some home buyers off the fence, but near record housing cost prices, others out. So we got prices up to all-time highs, and we've got uh, more properties for people to look at. Properties are sitting there a little bit longer. We've got the builders trying to ramp things up. That's the true new inventory. But it gives people a little bit more options, and we're in the busy time of year now too, especially here in the Phoenix area. We're already in the busy time. And man, in fact, if you're gonna list your house for sale, right now is, the peak is the next 10 weeks, basically. The next, couple of months, right straight through May, right into, the beginning of June. And then people, it gets very hot here. People want to they want to get moved, summer vacation, back to school, right? Unless you're in a retirement community, that's kind of the big thing. So 78 days closed days on market. Okay. We've got just over a 3-month supply. It's pretty healthy. Again, this is kind of a normal market. Even these rates, we're not used to them. It's kind of a normal rate. Absorption rate, 31, 0.98%. Not terrible. We've got average list price at 844, average sales price 585, and a list to sales price ratio is healthy at 99.98. That means people are getting pretty much what they want, what they have their home listed for. Okay. We're seeing a little bit of a decrease in new listings this week. And we are seeing, these are the days on market for per price point. So you can kind of check that out. Now, right now, at this moment, we have 16,654 properties for sale. And that's all property types in the greater Phoenix area. Okay. Active listings, let's see, we are up 13% overall, active listing week counts compared by year. Okay. And we have a 3% annual increase, a median increase in prices from last year. So prices are up, annual median sales prices up from 430 to 443. That's the median, not the average, which we just talked about. And that's up 3% for the greater Phoenix area. So we always take a look at this. This is the Crawford Market Index. And this is basically the index that tells us if we're in a buyer or seller's market. Anything under 90 is a buyer's market on the index. Anything over 110 is a seller's market. Right now, we are right there at 114. That number was going up and started coming back down a little bit. I think we're going to see a shift. It's almost like we're going to have 2 busy seasons this year. I think. Not anything crazy like we had before, but because 3 rate cuts probably isn't going to amount to what we were used to, but it definitely will have a bit of a lagging effect into the second part of the year. So even though we're in a busy season now, I think we're going to see some people who will be able to enter in if rates drop. Right, they'll be able to, it'll make it affordable enough, quote unquote, with the way things are, to afford to buy. So right now we're technically in a seller's market. supply and demand are just kind of hanging there. Even though our demand definitely, goes up a bit this time of year. Our supply, again, it was listings up 13% over last year. So Chandler tops the chart as a seller's market right now at 207 on the index. Then Glendale, then Gilbert, then Fountain Hills, Mesa, Phoenix, Avondale, Tempe, Scottsdale, Peoria. Those are all in sellers markets. So if you're thinking about selling, you have an advantage there. Cave Creek, Surprise, Paradise Valley, and that's it. Those are going to be in balanced markets. And then we have Queen Creek, Goodyear, Maricopa City, and Buckeye. Those are all in the buyer's market. So advantage to the buyer. So guys, I think that's all I have for you right now. There's a lot of information. I just wanted to make sure we got into all the noise out there, and you gotta always take these headlines with a grain of salt. It is clickbait. It is to essential, get people talking, get the new, something for the news to talk about. So anyways, if you have any questions at all and want any further clarification on anything, certainly send the article out in our weekly email, posted on our social media, and on those myths and stuff. You can read a little bit further if you have any questions. Also on what the Federal Reserve had to say today and where they're going to. But it's about the best news that we could get right now with the way things have been going with all that. So if you have any questions at all, let me know. Thanks.